everybody. Hi, everyone. Welcome back to another episode of VCTV, which is the Venture Capital TVS from LATOKEN. So I'm your host and moderator of the evening. My name is Sunny Mohanty, and I'm the Regional Director of LATOKEN Investor in Singapore. And I host VCTV and love VCTV, and I love VCTV viewers and the speakers. Today, we're going to discuss about a very, very important topic. Again, how to become a unicorn. It's about startup education. We've seen a lot of unicorns from Silicon Valley, from India, from South Asia. How to become one of them? So there you go. Today, our speakers going to share some of their knowledge, some of their experience about how to become a unicorn. So please stay tuned till the end of the show. There you go. Welcome back, Vandana. Welcome back, Kingsley, and I've got Harsh as well, behind the screen, backstage. So perfect. Today we're going to discuss about how to become a unicorn, especially for a startup. Their journey starts from being a startup, like a privately owned startup, obviously, founder, co-founder, grow your team, scale up, get some traction, get funding, collaboration, partnerships, get some customers, make some revenue, and then go towards becoming a unicorn, right? So how to become a unicorn? That's a very good question for in the minds of us of all the viewers today and the startups today. So let's just hear from our speakers today how to become a unicorn. Before that, I like to have a quick round of introductions about the speakers today. Today, I'm joined by Vandana, Tolani, Kingsley, and Harsh. Vandana, over to you with your introductions, please. Welcome back. How are you?
Hi, Sunny. Thank you for having me here over and over again. And thank you for being so energetic and always, making this happen. So first of all, a big thank you to you and the team behind LATOKEN who does this platform very regularly. I'm rocking as usual, and nice to be here and looking forward to speak a lot on this topic today. I'll introduce you to myself. I was in Singapore and Jakarta for 15 years in investment banking, and I had my own family office fund there. This is my 7th year in India, and I'm connected with now 350 investors globally. And I do pick up global deals. We are sector agnostic. We do $1 million to $25 million. And we are global entities, so please feel free to reach out to us on my LinkedIn or on my website, and happy to be here again. Thank you.
Fantastic. Thank you, Vandana. Vandana, welcome back. I always love to have you on my panel and discuss stuff regarding fundraising, startups, education, everything. And thank you for being there. Harsh, I don't see Kingsley. I think we just probably are backstage. Still then, Harsh, welcome back. Oh, Kingsley is here. But still, Harsh, I hope you have a good connection today.
Harsh, go ahead.
I'm having good connection, but for somehow StreamYard keeps shutting on me for some reason. Don't know why.
StreamYard needs very strong.
So just a short bio about myself.
Oh.
So the secret is, Harsh, you need a very high-speed internet connection.
I think the app is just collapsing. I think there's some technical issue from their server ends, I guess.
Okay, yeah, Kingsley. Okay, Harsh, go ahead.
Yes.
No, that's what I'm saying. I don't think it's a Wi-Fi issue because I'm currently having 10 Mbps internet, so that's not an issue.
Okay. I don't know if it's my ears. I can hardly hear you, Harsh. But Kingsley, a little bit of introduction or background about yourself, please.
Yeah, Sonny, it's good to be here again at LATOKEN VCTV. I think we are a big global family right now. We have Tolani here, we have Harsh, we have those behind the scene at LATOKEN that we actually don't see but are doing the great work. Much respect to one of you. And especially to Sonny for your always broad welcoming smile to all of us. Even when we come here, we are feeling a little bit down. We see your smile. We just kind of ginger up, and we are ready to speak about whatever subject is there. And that's a beautiful thing. My name is Kingsley Kobayashi. I'm a serial entrepreneur. I'm the founder of Kobayashi Group, among other companies. Founder of Hurricanes International, HBK Pharmaceuticals, Just to mention a few, I invest in different spaces, startup. I invest in commercial real estate. I invest in healthcare innovations, edtech, agri-tech, clean energy, just name it, traditional finance and blockchain. We invest in everything from that. So it's a pleasure to be here again today, and look forward to a fruitful discussion with Tolani and Hash. And Sonny, thank you very much.
Always, Kingsley. Again, I think it's not about just one person. It's about the speaker. I mean, you guys always, we sort of share the same energy level. That's why we're here together. Thank you, Kingsley, for that and being a part of and being a support of VCTV all the time. Harsh, can we hear you now?
Yeah. Thankfully, it's not crashing on me again. So let's hope for the great session today. So, short bio about myself. My name is Harsh Etia. I'm a venture partner with our ventures. I'm also the founder of Startup Hackers, where we are helping early stage startups provide with mentorship and support to grow their business. We help startups grow their business locally as well as internationally, and help them raise funds all the way up $10 million, right, from Indian investors. We have connects in Singapore, Middle East, as well as in US and Europe as well. Currently, I'm not sure if many people are aware, but last week has been phenomenal week for India with 6 unicorns. So this panel is actually bang on the right time, where we can discuss how those 6 unicorns, really achieved this feat after 6 years of toil.
Wow, it's a perfect timing then, Harsh. Great.
Exactly.
Yes, thank you so much, and great to have you all on this panel today. Before we move into steps towards becoming a unicorn, so for those who are new or the first time and probably an early stage startup, so let's just start with that. How do a startup or early stage startup who is obviously eyeing to either go a M&A or public, achieve a unicorn status, what are the steps needed for them to be there? Like, we just can break it step by step. Let's talk about early stage startup. Vandana, we can start with you.
Yeah, sure. Definitely. So to be a unicorn is no cakewalk. And each unicorn today has its own story with a list of features that worked in their favor. So firstly, it has to be disruptive innovation. Mostly all unicorns have brought a disruption in the field that they belong to. Uber, for example, changed the way people commuted. Airbnb changed the way people planned their stay while traveling. And Snapchat disrupted the usage of social media network. So the first, it's seen that unicorns are mostly the starters in the industry. They change the way to do things and gradually create a necessity for themselves. They are also seen to keep innovation up and running to stay ahead of competitors, which might later boom. High on tech, another common trend across unicorns is that their business model runs on tech. Uber got their model accepted by crafting a friendly app. Airbnb made the world seem smaller by making the best of the world, World Wide Web. And a recent report suggests that 87% of the unicorns' products are software, 7% are hardware, and the rest 6% are the products and services. Now, taking this further, a unicorn also has to be consumer focused. 62% of the unicorns are B2C companies. Their goal is to simplify and make things easy for consumers and to be part of their day-to-day life. Keeping things affordable is another key highlight of these startups. Spotify, for example, made listening to music easier to the world. And privately owned. Most of the unicorns are privately owned, which gets their valuation bigger than when an established company invests in. Now, Sunny, this April, India has had, 6 startups with a 1 billion valuation in 4 days. So we have created 6 unicorns, and that's quite amazing, I guess. So, these are some of the things a unicorn must have.
Yeah, sure. Why do we call them unicorns, not camels? Because
because they have reached the valuation of 1 billion valuation. So how this word came and who made it. We still have to do a lot of research on it, but basically, it's unicorn is a startup that has reached the valuation of $1 billion.
If Gary would be here, he would say unicorn is a mythical creature. I mean, it's not a real creature, right? It doesn't exist in reality. So, people make real startups unicorn. So I don't know, but anyways, next I have Harsh. Harsh, obviously you were also involved in the process of making this startup a unicorn. So let's just hear from you, because you also a part of the incubator, and besides, that's very important. Can you explain the process to become a unicorn?
Sure. So unfortunately, there is no standard process for becoming a unicorn, because the name by itself, unicorn, is supposed to be like a rare mythological creature, right? It's supposed to be very rare. And suddenly these days we are seeing so many unicorns kind of grow up out of the blue. So it's a very difficult and a very rare feat to accomplish. It requires years of sacrifice, years of being the first in the industry, believing in yourself when no one else would believe. So lots of challenges are involved. So the two of the biggest names, which happened last week, I can look at it as Misho and PharmEasy in India, which reached that status, right? The amount of sacrifice and the amount of innovation which they've done, and the most crucial part is complete knowledge of the customer mindset. I believe that is the root and the essence of where the potential seeds of a unicorn are based out of. There was this 1999 Amazon interview which I had seen on the internet, right? You see Jeff Bezos back in those days, and his obsession with customers, and how he ensures top-notch customer service, and his relentless focus on that, and that culture is permeated across his company. You see every time the focus is on relentless customer experience. Tech was just an enabler. Tech was not the reason why he became a unicorn, but it just facilitated what he wanted to deliver, what he wanted to provide for his customers, and create an extremely brilliant user intuitive product. That is exactly what has happened with Misho, because Misho, I'm not sure most people know that, but Misho is essentially like a B2B reseller platform. So instead of you have one central Amazon which is selling products individually. What Misho does is Misho enables small resellers to sell products, and they have a huge inventory of lakhs of products on their platform, and it enables small resellers to sell them. So what this did was, it provided opportunity to lakhs of Indian women to become small-scale entrepreneurs themselves, and they could then use the Misho platform and enable the selling process extremely easily. So they could create their own website, they could sell products on WhatsApp, it was created through a completely custom modification in the app, where they can directly shift the products from the Misho product onto WhatsApp, and they could sell on that. So it was extremely intuitive, it was extremely user-friendly, and that is the reason it made it into the Y Combinator, and that was exactly the reason why it really scaled up to the next level. And imagine the kind of employment opportunities it provided to, especially tier 3, tier 4 town Indian women, where they could now start their own businesses online, and they started earning like 25,000 rupees, 50,000 rupees in a month, and that is how the goodwill started to spread. And this is exactly why Misho went to the next level. So that is essentially what is required: relentless focus towards the customer. It has to borderline on obsession, and consistently focus on that, believing in yourself, believing in your company. I have a similar story regarding PharmEasy as well, because I do have some relation to. So the founder of PharmEasy is actually one of my seniors, one of my college seniors. So I'm familiar with some of their the way they started as well. So it's really incredible, the kind of sacrifice, the kind of toil that they've done. Just imagine investing more than half of your net worth in trying to build your startup. That is what a company like PharmEasy has done. You require that sort of commitment, that sort of relentless passion. Most startups which we typically come to us for fundraising, they haven't even invested like $5,000 of their own money, and they expect $500,000 from the investors to ship their idea, so that they can make an MVP out of that. And here comes this company, and this company invested $500,000 to begin with. Then they invested $3 million, and then they raised their first round at a significantly higher value. So this is the kind of commitment that is required to really take it to the next level.
Yeah, just do you think unicorns are often criticized for being high risk and offering little in return to investors?
So in some cases that might be true because, so for example, biggest debacle I would say would be WeWork, because WeWork was essentially a real estate leasing company, which was kind of a co-working space, but they kind of try to push themselves off as a tech company and get tech valuations which do not make sense whatsoever. So obviously there would be some bad apples in this case, but that
Yeah.
doesn't. It's not fair for calling every unicorn is a bad one, because most of the others, you look at Amazon, you look at Facebook, Google, and all the other companies. Just Coinbase 2 days back. So
Yeah.
these are all companies which created phenomenal value. And so the success of the Coinbase IPO 2 days back, it reinforces all of us in the blockchain and the crypto community that blockchain is here to stay, crypto is here to stay, and you definitely have to get on board or you'll be left sidelined.
Absolutely. Coinbase is the first cryptocurrency exchange to go public. And
Exactly.
more to come, more to come. Thank you so much. Harsh.
Absolutely. Can't wait to see LATOKEN over there as well soon.
Yay! Someday. Thank you so much for your wishes. Okay, great. Next I have Kingsley. Kingsley, so how to achieve a unicorn status? I mean, obviously there's no right formula for that, but there are so many ways to achieve that, achieve that, and obviously follow that route. But let's just hear from you what an unicorn is as per you, and how to build one from scratch.
Yes. Very simply, a unicorn is a company that is valued at $1 billion. That is what it means, and how you get there through different ways. But today we are talking about education technology unicorns, and this month alone we had about 22 unicorns who came out from startup and became unicorn companies around the world. What are the causes for pushing? What are the factors pushing these companies to become unicorns?
Yeah.
First, you have the COVID-19 catapults that have made people to realize that we have to change the way of education. About 1.6, 1.7 billion people are currently undergoing digital change in ways of education. Another way is digitalization is coming into effect. And then you also have the challenges that the education sector had been facing. So this has given rise to people to create new innovations to make education more affordable, more accessible, and more understandable for different people. You will know at the beginning of the pandemic, there was a scramble on how to solve education. How do we, how do our children understand e-education? You also had the problem of infrastructure in developing countries and even in developed countries, because you had professors who have never used computers before, they have been forced to use computers. So even they themselves had to learn. So you had what is education for children and adults, and then you also have the corporate education. So this gave a rise to many opportunities to many companies, startups, to start thinking of ways to innovate and make education better. So there's a lot of unicorn companies out there, but when it comes to education, I think the leading countries is you have China right there going very fast. Then you have America with Silicon Valley coming up with different ideas. You have Coursera, who raised about $54 million, and right now is valued at about 5.4 or 5.6 billion because they did their IPO. So the truth is, a lot of factors. It is not one factor that makes it to become a unicorn, but in the education sector, it is not only the e-learning that makes you a unicorn. There are other services that goes with it. There are marketing tools that you need to provide, and being able to be this versatile to provide the three sectors or four sectors that are involved in education, and then you have the discipline to persevere. If you persevere enough in what you are doing, you become better at it, and then hopefully you become a unicorn. It is the hope of every startup to become a unicorn. The hope of every company. It is also my hope that what I am doing becomes a unicorn, right? So we all have that hope. But when you start it off, you are not sure of where you are going. But being able to adapt to changes, right? We've had unicorn companies for the past 20, 30 years or more in the educational sector. But the COVID-19 that came in has given rise, push forward innovations, not only in the educational sector, in other sectors, but in the educational sector has given people the opportunity to be able to learn online using different platforms. And with the population of the world that is trying to learn something new, even those trying to learn about blockchain alone, people want to know about blockchain. People want to know about crypto. They all have to go to some platform to learn. When you talk about social media, Facebook, TikTok, this and that, people have to know about it. So how do you provide the materials? How do you provide content? How do you provide accessibility and affordability for them to be able to get what they want? That is what makes you a unicorn. When you are able to put all this together, you are able to attend to the wants of the people. And once they are coming into it, the quality of your content also matters a lot. So these are all factors that make you grow up become a unicorn. Being a unicorn, yes, has advantages and disadvantages. Yeah, people will say, hey, now you are oppressing others. Of course you are not oppressing others. So you are asking for percentage. Of course you are not, because when you look at it, a startup company, you are putting money from the beginning, not knowing whether they are going to grow or going to die. It's a startup company. They have to do the research. They have to do this. It's a seed investment. Right from that, so the investor has to be able to have equity or make a good percentage out of the outcome to be able to invest in it. So this is, how I look at it. So it's very simple but complicated.
No, very, very nicely elaborating, elaborative explanations from Kingsley. I hope startups and entrepreneurs are listening. Actually, I've got some questions from entrepreneur from the edutech space. He has some questions for our speakers today. So there you go. So can you please guide on customer acquisition strategy and plan? So I think he's an early stage. I think he is an early. He's the founder of an early stage edutech startup. So his question is, can you please guide on the customer, how to acquire customer? What's the strategy? What's the plan for an early stage startup? So can we start with Harsh for this question?
Sure, why not? So if it's an edutech startup, the most important focus is what kind of customer base is targeting, right? It's a children's program, it's K-12, it is graduation, which kind of customer segment it is there. First kind of pinpoint and laser target those audiences which are there, right? That's going to be the first step. Identify who the right customer is, then kind of figuring out where you can easily target these customers the best at the easiest ways and at the best possible timing. So what tends to happen is, to give you an example, we have some companies like Baiju and Topper, which were primarily focusing on the typical IIT JEE coaching. So focus was on 8, 9, 10th, 11th educated students, and they were focusing relentlessly on that. So it would start directly from the school level. They would partner with schools. They would partner with online social networks, primarily targeting that customer base and their parents. So you need to understand who the buyer is. You need to understand who the customer is, and kind of identify the right times and the right channels to reach out to them. At the same time, the focus also has to be on the messaging part, right? So if the messaging for someone for 5th or 6th standard kid is going to be different from a messaging for an 8th or 9th standard kid, because the priorities are different. So a lot of the times, most companies which I come across, they tend to miss out on the messaging element of it, and people have forgotten the importance of using the right messaging. And that is where the art of copywriting comes in place. It is a very subtle thing which doesn't get a lot of attention, but that subtle thing can really make a huge difference. So identifying the right customer, who exactly the customer is, making it as niche down as possible, identifying the right channels, and then kind of identifying the right message. I would say this is what the entire marketing structure should look like.
Yeah, thank you. So yeah, So basically, thank you so much. I just have to show the question again. So the question coming from Zahid is, can you please guide on customer acquisition strategy and plan? I think Harsh really touched upon some great points. Vandana, over to you next.
Yeah, thanks, Sunny. So, Zahid, see, first of all, the first step to, the first step to get investments is have your pitch deck in order. If your pitch deck is not in order, definitely it's difficult for you to get investments. Investors don't spend more than 90 seconds on a deck, so make sure that your deck is not too long over here, and it is just about 90 seconds where you can explain all your things well. Not only that, have a video pitch deck, have a product video as well, which explains your product really well so that you can reach out to the right kind of customers. Coming to your customer acquisition strategy and plan. Firstly, what is your target audience? You have to try and think who is your target audience. Are you even targeting the right kind of audience? Not only this, go digital all throughout. It's very simple. Use your WhatsApp story, use your LinkedIn story, use your Facebook story, use these platforms to get as many customers as you can. Have a proper website. A website should always be there. If you don't have a website, people don't know where to look you up. You must be active on the digital media platform, Instagram, where there are lots of students, and Twitter. And you have to target the right kind of audience with the right kind of banners that you create, and start putting these simple things on your social media. So I think that will really help you to get the right kind of customers, and this is the way you should plan it. Make sure your target audience is not something that you are, you're having a wrong target audience. Sometimes startup entrepreneurs don't realize they are targeting the wrong target audience. You could be targeting housewives instead of students, etc. So that could be one possibility that you should look into.
Very good points. Target audience, very important.
Yes.
Thank you, Vandana. Next, I have Kingsley. Kingsley, yeah, we have an entrepreneur in the edutech space. So his question is, yeah.
Please go ahead. Ask the question again, please.
Can you please guide on customer acquisition strategy and plan?
Yes. It's not as easy as people think. Before you start your business plan, before you even put your pen down, you should actually have a target audience, like both speakers said, and then your region also plays a role. What part of the world are you? And then why am I saying that? Then because it depends on your internet service. Is it fast? Is it slow? Do people have access to computers? Do they have access to smartphones? Do they have access to every other thing that is necessary to make edutech work? Now, if you are in Japan, or you are in America, or you are in a developed world, it's easier for you to start because you have all the infrastructure in place. If you are from economic countries where they don't have the sorry, can you close that door? Where you don't have the infrastructure, you have a problem. You have a problem because you have to start from the beginning.
Yeah.
So when you start from the beginning, it becomes very difficult for you to grow faster. So what you need to do is to collaborate with people who are in developed countries, or to collaborate with schools who are in developed countries, to work with them to get to where you are going. Now, this may seem difficult, but social media has made it very easy. LinkedIn, Facebook, Instagram, Twitter will allow you to reach an audience outside of your regional area, to look for collaborators to collaborate with you. And it's okay, this is this is the people. Are you targeting primary school children? Are you targeting high school children? Are you targeting university students? Are you targeting people who are already graduates and they are working and they need to know something more, which is corporate education? So depending on which area you are focusing, then that is the kind of area that you will now plan for. So when you start your planning, you have to lay it out. Okay, for example, if I'm going to target people who are already working in the HRO industry or working in the accounting firm, so I have to target my educational technology towards that area to provide for them. Now it becomes easier for them because those who are already working can afford it. They don't have a problem to pay $20 or $30 or $50. But whereas people who are in primary schools,
Yeah.
or in junior high or senior high have a problem to pay that money depending on which region they are from. Can their parents afford to pay that for them? Can their parents afford to give them a smartphone or a computer for that purpose? So a lot of factors come into play depending on your region. So depending on that, you now move forward and say, okay, this is how much I have right now. This is how much I need. You have a business plan that you can now present to investors like us and say, okay, like Tom said, 90 seconds, 3 minutes, maximum 5 minutes. Because I'm not going to listen. People who want to invest are not interested in sitting down and listening to you for a very long time.
Yeah.
You do your pitching to them in 3 to 5 minutes maximum, and then you send them materials to look at. You send them your spreadsheet, how your projection, how you want to get there, and if they are convinced, they will put their money in your project. That is your first step.
Yeah.
From that, once you have the money, then you now show that you are working. Because what happens is some people raise $10 million and they're like, yeah, I have $10 million. Hello, it's a loan. It's not a gift. This is where
It's not a grant. It's a loan. It's a loan,
yeah,
not a grant.
So in Japan we call it jikomazoku. They already my Japanese and my English anyway. Jikomazoku, when they believe they have succeeded by just raising that money. No, you have not succeeded. That is your seed fund for you to invest in the business and prove to the investors that you can do it. Then you go to Series B, Series C, Series D. Then they're like, yes, you have made it. Until you get to the Series C, Series D, you are just still trying to use money. That is why a lot of companies, they fall out on the way, because they are contented at the middle part where they have not reached their goal. So you have to have a plan from the beginning to the end. Tell me, okay, I need 10 million now. I'm going to need 20 million in 1 year. I'm going to need around 5 million in 10 years. And from this point forward, we start making money and I start paying you back your money, which is exit strategy. You know, a lot of people just invest without asking for exit strategy. How do I get my money back? So you telling the investor how he's going to get his money back up front helps a lot in making him to make that decision, him or her to make that decision, either to put the money or not. So these are just a few points. There's a lot of things to talk about when it comes to this. I like talking about this, so I can talk to you tomorrow. So let me allow our panelists to talk.
Thank you so much. It's very important. Investors shouldn't lose their money. So it's very important to tell them the exit strategy and how can they recover their money back.
Very important.
Very important. So
Exactly.
And the first rule is not to lose money. The second rule is not to lose money.
Yes.
The third rule is the first and second rule.
Yeah, absolutely. I absolutely agree.
Yeah.
Ash, you want to say
one more point. Yeah, just one more point I wanted to add here. Most important thing in social media, if you're looking to acquire customers, to that is it's the algorithm, right? So what typically tends to happen is people tend to rush. Yeah, can you hear me?
Yeah.
I'm audible, right?
We can. Yes, I can. Yeah.
Okay, perfect.
Vandana,
so,
you can?
I can hear you. Yeah.
Perfect. So the social media algorithm, essentially how it works is, if you're using that for customer acquisition, the most important thing is to identify the right target customer, as I mentioned earlier as well, right? And not run after vanity metrics. What typically tends to happen is people want, high number of views, high number of likes, high number of engagements. what that tends to do is it confuses the algorithm of the social media. The social media is designed to structure in a way that whatever people are engaging with that, they will kind of show it to people who are similar demographics, who have the similar mindset, similar approach with that kind of product, and only those guys will see similar product, right? So with what that does is it will limit the number of reach that you have, probably not to everyone. So if you have laser targeted customers for your product or your website on the or your social account, right? What Facebook, LinkedIn, Instagram, what they will do is they will only show it to those specific people who are extremely relevant to your target audience. If you do that customization right from the get go, if you focus on the vanity metrics, it will confuse the algorithm. But if you focus on those metrics, only those people will come and engage with you and with your platform. What that does is it will give you an accurate base of what your exact customers are, and only those kind of customers will come on your platform. So, for example, with my Facebook group, Startup Hackers, when I worked on it, I used to get almost like 50 applicants on a daily basis. Most of those were junk leads, people creating duplicate Facebook accounts, and people wanted to join the group to do those fake crypto and spam posts, right? So I would be very diligent in kind of removing those and ensuring out of those 50, only 5 or 6 which were genuine, only keeping them and completely removing that. I could have, gone the other way and just to add more numbers to the group, added those junk profiles. But I was very clear that I wanted to remove that so that I can focus on the 5 or 6 relevant ones. So I'm communicating this to the Facebook algorithm that this is the customer that I want, and Facebook will then give me only those kind of customers for my group, and only those kind of customers will see my group, and then they'll get the opportunity to join.
I think social media is a very good tool, especially in a digital world today, online world today. If you know how to play with it, there you go. That's just, I think, Zahid,
Exactly.
education, especially online education, digital education has picked up. And for you, it's very important to use the social media channels. And Harsh just nicely explained how to use Facebook for your business, to grow your business online. Thank you so much, all three of you. Kingsley, are you here? Are you back?
I'm here. I've always been here.
Okay, sure. Just making sure because
Yeah.
thank you so much.
I know you can't see me, but it's okay.
No, I couldn't see you for some time, but now I see you back. So we have this question as well. I think it's a very relevant question for this panel as well. How much time should we bootstrap, like especially, and when should we apply for a seed fund, especially those who are bootstrap, like self-funded and pre-seed stage. So I came to know first we should bootstrap. So how much time should we bootstrap? Okay, Harsh, would you like to take this first? Or Harsh?
Yeah. So initially, my recommendation would be to bootstrap as long as you can, as much as possible, because that will not only help you in retaining your equity as much as you can, it will also give you much of the control of your startup and the direction that you want to go, right? So initially, try to get as many customers, as much revenue as you can. But obviously, it's going to be different from different industry to industry. But typically, for the startup sectors, where technology can be built very easily, you can build an MVP for like a few $1,000s. That should be the approach. Try and build the MVP for like $10,000-$20,000 minimum. Get that initial validation from your customers. Get them to pay you. And try to delay the fundraisers as much as possible, because that will help you retain the equity for the later round. Because in the initial round, what will happen is you'll probably dilute like 10-15% for $1 million or so. But once you reach the truly higher levels, the unicorn levels where you're raising 70 million, 100 million, at that level, the discussion happens at 20%, 25%, 30% equity dilution, right? So if you kind of end up losing most of the dough in the beginning, you won't have much left at the end of it. So that is why it's extremely important to kind of push as much as you can, unless it's like a deep tech or deep research industry, right? So there are 2 medical device companies which I'm working for in Israel and in US. So for them, that's not possible, because the product development alone takes around $15 to $20 million. So it's not possible over there that you can kind of bootstrap and put in your own money for products like those. But for regular tech companies, I think it's more than possible to run the first 2-3 years, invest like $500,000, $1 million of your own, and get that revenue run rate by yourself.
Right, great points, Zahid. If you're listening to what Harsh said, I totally agree with him. Thank you so much, Harsh. And Vandana, your your insights on this question. What do you got to say on this?
Zahid, sustainability leads to scalability. So always remember this. You have to bootstrap all your life long. How are you going to sustain otherwise? You're not going to just sustain with the seed fund that you're going to get. So, you have to keep bootstrapping all the time and focus on business. If you have hired any investment banker, then maybe you could let the investment banker look for investments for you. That is their job. You just focus on your business and bootstrapping. If you cannot sustain, then you cannot scale. So that's the whole point here which you need to take up. And of course you can apply for investments at any given time. And once you are ready with your product, with you have your customers, you have already some customers coming in, you're already ready for investments. Then the things that you need to have in order is, of course, pitch deck. Get it done by a professional. Don't think that you would know everything. Get a video pitch done. Get your things sorted in order before you start pitching to the investors. So always remember, sustainability will lead you to scalability. So don't stop bootstrapping just because you're getting investments.
Wow, that's a very good advice, Vandana.
Yeah.
Words of wisdom. Don't stop bootstrapping, Zahid. I mean, even though you get that seed and further rounds as well. Thank you so much, Vandana, for sharing that advice with the Zahid and all other entrepreneurs who are watching us today.
Yeah.
Thank you. Kingsley, your insights on this question. What do you have to say? You are mute.
It's okay. If you don't say that, I don't wake up. Thank you very much. Like I say, it's always regional. Everything is regional in life. The fund, your seed fund, the fund that you have by yourself depends on the region you have, depends on your income that you have gathered to start the business in the first place. Myself being one of those who started startup when there was no internet. There was no social media when I started my first company, Hurricanes Investment. What I would do is I would take an idea, go to people that have money, pitch to them. If they agree, they will put their money. Then I'll go and do the investment and bring them back their profit. That was those days that we used to do that. I'm talking of the early 90s and even far beyond that. But today we have this social media where you can actually gather a small group of people and talk to them about your idea, and they buy into it. You have your initial funding. The initial funding of $20,000 to $50,000 is very important for you to bootstrap. It's very important because you cannot just, if you come to me and say, okay, I have this business I want to do, it's going to cost me $2 million. My first question is, how much do you have right now? And if you have zero, then there is something to talk about. But if you say I have $50,000 or $20,000, and this is what I plan to do with that money, this is what I'm going to use the money, this is what I've done so far, and that's what I'm going to do next, then I am encouraged to add money to it, because you actually have to put a skin in the game. If you don't have a skin in the game, you have nothing to lose. Right? If you are giving me a business that tells me that you have nothing to lose, then you don't have the encouragement to actually make it work. So you have to put a skin in the game. Yes, you put your time, you put your energy, but you also have to put a little bit of your money. And once you have that little bit of money, don't waste too much time. Don't procrastinate. A lot of things that keep businesses is procrastination. I will do it tomorrow. Oh, I need to get here first. I need to get there first. No. Get your business plans out there. Go to somebody right away. Discuss. The person may not have the money to help you, but he may have the idea to help you to get to where you will get the money. That is why your first pitch, your first few weeks of talking to people is not actually about money. It's actually about the project and the passion you have for the project. If you are telling me about your project and you cannot extend it, you don't have the passion, I am not going to put my money.
Yeah.
You may have the best idea in the world. So the first thing is having the idea. The second is having the passion, and then put the skin in the game and have the courage to present it to people around you. You can even present to your mom, to your dad first.
Yeah. Yeah.
To your brother, to your sister, to your friend. Let them understand what you are trying to do. They may not be versatile enough, but they will see the passion you have in presenting it. And they will tell you, yes, my son, yes, my cousin, yes, you can do this. Yes, my husband, yes, my wife, you can do this. This is very important. The passion you put into it. You know, the way you explain your project. There are people who have very excellent projects, but they don't know how to explain their project. So they start, I tell them, go and get a PRO or get somebody to explain the project for you. We are all not very good at everything. So you need someone to explain your project the way you want them to understand it, and explain it as you are explaining to an illiterate or a 5 years old.
That's true. That's true.
So that they are able to know where you are going, step by step where you are going. And believe me, you are bootstrapping all the way until you get that 1 billion valuation that will make you a unicorn.
Absolutely. I mean, I couldn't agree more to what Kingsley just said. Keep it simple, easy, stupid. I mean, whatever that saying is, keep it simple all the time. Explain to, as Kingsley said, illiterate person. If that person who doesn't have understanding of what is a startup is, but can understand the value you bring to him, then you've just won 90% of the battle over there. It should be simple,
and
right? It should be simple. Yes.
Sonny, to add to this, I would like to add two very relevant examples to this, right? When Bezos started Amazon, he took about $250 million 30 years back from his parents before he started Amazon to build his first website.
Yeah.
The $250,000 then is easily probably worth $2 million right now after inflation. That's the kind of money he put upfront. Same was true for Bill Gates, where Bill Gates' mother, she was a senior representative in IBM, if I'm not wrong, and she had put in about $200,000 50 years back when Microsoft was started, and that was the initial bootstrap amount to start off Microsoft, right? So that is what is required. That initial bootstrap amount. If you are not committed, as Kingsley was saying, if you're not committed to your own startup, you're not putting your own money, you're not putting your friends and family's money, then where is your commitment?
Exactly.
If I as an investor and I get other investors on board to invest in you, I need to know that this is the only ship that you're on, and if this sink, you sink. That way I know that you are going to put your life into it to ensure that the ship never sinks, it always floats.
I think your money, yes, absolutely agree. Put some of your own money from your family, as you rightly give the references as well. So Zaid, there you go. You've got so much good points today from our speakers. I mean, these are all like real life practical questions coming from a startup who is trying to go global, scale, and get funded. Thank you so much. So we have 15 more minutes. We take this last question. I think how to calculate pre-money startup valuation. How to evaluate your startup before you probably get
the same person, is he paying for consultation?
Sorry?
Is the same person, is he paying for consultation?
Not me. Not me, but I think his questions are quite practical for any
very nice, valid questions. Yes.
Very valid questions, yes. So I think I don't see any questions relevant to this topic other than these questions. So hence I put this up. So yeah. So how to evaluate? How does a startup valuation starts before when they get any funding? Harsh?
Sure. So ideally, at this early stage, trying to value something would not make sense. It'll depend on the stage of the company. If you have revenues, then at least you have some benchmark. But if there are no revenues, or if the project is like a deep research project like the medical device companies or space technologies, it's a different scenario altogether. But at this point of time, the safest way to go would either do like convertible note or a CCPS or a safe note. That would be the safest route because you can simply do a discount to the early stage investor, right? So you can add like an annual 20-25% discount on an annual basis, and whenever the next like a pre-series A or series A round happens, where you have a more solid valuation done, you can give them an annual 25% discount to the early stage investors. So that would be the safest route to go for right now. So that would make more sense. Or if you have some sort of revenues in place, normally some sort of revenue multiples they go by depending on the nature of the industry. So if it's like a product based industry like an e-commerce or a physical goods industry or that kind of industry, they typically don't attract those kind of multiples. But if you have a purely tech game, like a SaaS company or any other purely technology companies, they typically tend to attract slightly higher multiples depending on their business model. So the safest way would be to either go for a CCPS or a safe note or a convertible equity.
Wow. So great. Thank you so much. Conscious of the time. Vandana, over to you, please.
So basically, I always tell all my startups that they need not tell the valuation to the investor in the first go. It's really not necessary.
Right.
They will box themselves in. So let the investor throw figures. Then they can always go back to what is their calculations and then discuss and negotiate with the investor. One is that. Second is that our company makes financial models and does valuation, which is a paid service. So Zahid, we could get that done for you. And it again depends on what is your revenue, who are your customers. There's so many things we have to look at. I mean, it again depends on startup to startup how we calculate that and come up with figures. And that is one thing. Second thing is that this you have to understand that focusing too much on valuation and not focusing on your business or not focusing on what you're building first to get your revenues, etc. I think here you are making a little bit wrong move here. So first is that you need to start bootstrapping, and before you get into investments, if you don't have the revenues, only when you start looking for investments, get a professional pitch deck done, get a professionally made financial model and valuation done, reach out to me, I could help you out with that, and post that you start looking for investment. I think this is the whole thing that and whenever you are proposing it to the investor also, don't just say this is my valuation and I want at this valuation my investment. What's going to happen is you'll just box yourself in and you will not leave any room for any further negotiations, and that's it. It will be totally a big backfall for you.
Wow. So yes. So Zahid and others who are watching this, please don't box yourselves in the first round of interview with any investors that you're trying to reach out to for funding. So it's a very key. Tell me. Yes.
One point I would like to add is not all businesses are investable either, right? So you need to be careful about understanding whether your business is investable or not, and whether it's ready for VC money and the VC format or not. Because VC have their own way of working. It may not be suitable for every business, right? So having that understanding and that clarity is also extremely important. That is your business suitable for VC investment? Because VC investments look for a unicorn within 5 or 6 years. And if your business and your industry doesn't have the potential of scaling that quickly, maybe VC investments is not the right idea for you.
So yeah, very, very right. Both Vandana and Harsh rightly pointed out, is your business investable by VC? Because they look for unicorn to grow in 6 years. So yeah, very, very valid point. Let's hear it from Kingsley.
Yes, valuation. So what do we evaluate, right? What are we evaluating? When we talk about valuation, what comes into mind is financial.
Yes.
That is not correct. For example, if you have somebody who has served or who have worked in a school for 20 years as a teacher of chemistry, and that person is trying to do ed tech on chemistry education. Now, he has a valuation of his 20 years experience to put on ground. So what you do first of all is to explain to me what you have done in the past 20 years. Your experience is part of your solution. If you are a nurse, for example, and you want to start something on nursing education, and you have worked in the nursing sector for 25 years, you have a valuation of 25 years experience to put on ground, which I will look at, because that already tells me that you are able to do the business. But if you are a startup that has no experience whatsoever, you just come out of school and you just, okay, I want to do this. Now, your valuation does not include your experience in the field. It's your idea and your passion to make it work. Now, if you are already on the move, you're already working on something, so you have a valuation of what you have done so far, plus your experience, plus your track record of what you have done so far. That is why a lot of people, we all know the law of diminishing return. Mostly SME countries, SME companies fall down when they're about to succeed, because they get to that point where they're to succeed and their finances go dry. They don't have money. So this is where they need money to boost the business up. But unfortunately, they don't have that money. But if you come to me as an entrepreneur that I have come this far, and I'm able to see your track record and evaluate your track record of what you are doing, which is means, okay, you've been making money a little bit, you've been doing it, it's very different from somebody who have no experience at all.
Yeah.
So we are able to evaluate that. But a lot of people tend to over-evaluate. You know, they tell you, I have an evaluation of 2.5 million, whereas I don't have 500,000. This already puts off the investor, like Tolani said. They already box themselves in because the valuation you are giving yourself is too high. Sometimes you undervaluate your what you have. So it is always better to lead to the investors to look at what you have, what you have done, but just explain your experience, explain everything you have done, and they can figure out what your company is worth to good investors. And then from there they tell, okay, I will put this amount of money into your company. You are looking for $1 million. I will give you 400,000. Your evaluation is not up to that. With this 400,000, you will be able to get here and get there. So it depends. And again, it depends on the geographical location. Because I am going to look at it. Are you going to succeed? Or are you going to fail? Do you have the infrastructure around you to make it work? Or is this just a dream of yours that you are trying to build that will never come to fruition? So we all want to invest in people who are result-oriented. Result-oriented. You have to put to me that you are result-oriented. You don't have to be good at what you do. It's like what I tell my staff all the time, that you don't need to be good. Just give me result.
Right.
And if the result is good, then you are a good worker. You are a good manager. You are a good entrepreneur. But if you have done 2, 3, 4, 5 investments or projects and they are all bad, then I have a problem, because I will look at the track record. So your track record is very important. It's part of evaluation. And like I said, there is no bad project always. Just, bring it out, we'll look at it. We'll help you look at your valuation. We'll help you look at where you are going, where you are coming from. And you have people like Hash, Tolani, myself, Sonny to help you make that happen. Either free consultation if you cannot afford it, or paid consultation if you're already up there. So we have different ways. So you are free to get in touch with me on LinkedIn, Facebook, Instagram, Kingsley Kobayashi, or kingsley.kingsley.kingsleykobayashi.com, or just put my name on any search engine. You'll see what I do.
Very good. Thank you so much, Kingsley, for your insights. I mean, these are
arigato gozaimasu.
Oh, okay. I have to learn Japanese.
I'm not sure the other guy understood what that meant.
Yeah. Exactly.
It means
That's what I'm saying.
it means thank you very
It means
much.
thank you very much.
Arigato gozaimasu is thank you very much. Yeah, shesheni.
Oh, that's Chinese. I know that.
That's Chinese.
Thank you.
That's
That's
Chinese.
Chinese. That's
You,
Chinese. I know
you
that.
can't
Yeah.
mix Chinese and Japanese
Yes.
in the same line.
I,
Well, we are multilingual, basically.
I speak a lot of languages, so
Yeah. So great. I had a great time today. I am sure all the viewers had an awesome time today as well. I can hear some background noise, but anyways. So thank you for your participation, Vandana, Harsh, and Kingsley for this session today. Very informative. I think the person who was asking questions is a real entrepreneur, the real company, and had real questions, and you have nailed it down perfectly. And again, as Vandana said, Kingsley said, Harshli said, if you want to have a paid consultation, obviously you always can reach out to them. This was on VCTV, so they can obviously help you with the right direction, to go in the right direction. That's the whole point. And obviously, thanks for watching VCTV. I'll be back again tomorrow. I hopefully would have you back again, Vandana, Kingsley, Harsh, because we are like a VCTV family. So till then, all of you, all the viewers of VCTV, thanks for being here, and thanks to all of you again for being a part of VCTV. I'm going to see you again tomorrow or next week and coming days. Until then, stay happy, smiling, and take care of yourself. I'll see you again.
take care.
Bye bye, everyone. Take care.
Thank you, Zaid, for all the questions. I know you're an entrepreneur and you are pushing very hard. You're right on point. Keep doing what you do. Thank you, Sonny. Thank you, Tonali. You guys have a nice week ahead.
You too.
Thanks. Take care, everyone.
Bye.
Bye bye.
Bye.